as always, thanks for joining. This is a webinar that I'm doing about my experience investing in Alberta real estate. And, through this webinar, I'm just kind of hoping to share some of my thinking, a little bit about my investment story as well. And, kind of just like what happened to make me, look at investing outside of Ontario. Because as we've spoken about in past webinars, we find that frequently, especially investors, like real estate investors in the US, they're very comfortable investing outside of their states. But there's something that I noticed with some investors in Ontario where they just like want to be able to drive to the property. And I was one of them. So that was kind of just where, my journey started. So anyways, enough about that. A little bit about me. Alex Zhvanetskiy, realtor of Freemax Condos Plus in downtown Toronto. I spent a decade in Toronto's condo industry. I've conducted over 65 condo risk assessments. I have a QR code there on the screen as well if anybody wants to connect with me on socials. I myself have been a real estate investor since 2013 with a portfolio that has properties in Ontario and in the US, in Ontario and in Alberta. Both long-term rentals as well as a short-term rental property that I started in October, and we'll be doing another webinar about that pretty soon about kind of how that's been going. And in 2022, I was in the top 1% of GTA condo sales from over 70,000 realtors that we have here on TREB, the Toronto Regional Real Estate Board. So the first part, I guess, is just a little bit about the basics and the reasons why somebody may want to choose to invest in real estate. Like when you're investing in real estate, you're investing in a tangible, physical, in-demand asset. Like you're investing in a basic human need. We need food, water, and shelter as human beings. And it's also a safe way for you to keep your money because, as you can see, when our government continues to print money and devalue our currency, vehicles like real estate keep your money safe and secure and appreciating. Canada, we're out of the G7, we're the fastest growing country. It's people continue to immigrate into Canada, and when they do that, they usually go to one of 4 locations, whether that's Toronto, Vancouver, Montreal, if they speak French, or Calgary, which is the fourth largest city in Canada. So, there's several ways that you make a profit in real estate. One of them is just property appreciation. So we've been very fortunate with that. Anybody who's owned properties in Ontario that they maybe bought, in the last 10 years, they've seen very significant growth over the last several years. So, you make money just by your property going up in value. When you're renting out your property, you're also having the principal paid down by somebody else. So you're having somebody that's paying down your mortgage, and that kind of combination. And then if you're very lucky, then you're also getting cash flow. And cash flow is one of the old school ways of looking at investing. I remember reading Rich Dad Poor Dad by Robert Kiyosaki, and that's one of the things that he talks about, that you want to invest in assets that put money into your pocket, and that assets need to be cash flowing. And what I mean by cash flow is that particularly when it comes to real estate, is that the revenue that you have coming in is covering all of your expenses, and maybe you even have something extra left over at the end of the month to put into your bank account. And then ultimately, real estate is also a very good tax shelter. When you sell, you pay taxes in a much different way than you would if you earned that same revenue as an employee. And full disclosure and full disclaimer here, Carmelo and I were not accountants, we're not tax experts, we're not financial advisors. We're just a mortgage broker and a real estate agent that also happens to invest in real estate. So that's as far as our expertise goes. So anything that you get out of this webinar, you just take with a grain of salt and do your own due diligence. So here's some recent headlines just about kind of the state that we're at in Canada right now. So, the government of Canada continues to bring new immigrants in. There's over 370,000 new immigrants that were welcomed into Canada last year. And, at the same time, the Bank of Canada is also doing their best efforts to curb interest rates and assist with housing affordability. But one of the challenges is that at the end of the day, we've been building homes very slowly, much slower than we needed to. Supply and demand, we just haven't kept up. And this is one of the major impact factors that have put us in the situation that we're in today, especially in markets like Toronto, where the entry point for many is very challenging for them to purchase their first home to live in, yet alone to purchase a property to invest in. Like, that's something that's maybe very difficult to attain. And but at the end of the day, regardless of the market, as long as you're investing in a growing market that can that has that supply and demand, you're going to come out on top. So this is just some historical data here from listings.ca. So this shows the Toronto real estate price history. This chart is up to 2020. To show what happened in 2023. So what I want to show is that there's a pattern. Like, it doesn't just go up continuously. There is a balancing effect. Like any commodity, when the price goes up, there is a point where the market starts to feel like that commodity is just too expensive, and then the price starts to go down in the other direction. But then when the market starts to see value in that product again, then prices start to go up, and that's what you can see here. So as much as we've had a little bit of a correction over the last year and a half due to higher interest rates, if you look at real estate as a 5-year purchase minimum, you could see that pretty much at any point on this graph, even if you bought here, let's say, for example, the peak that we saw here in 2017 and 2018, even if you bought then, and then there was a drop that happened in 2018, 2019, you would have still been come out ahead in 2022. And I mean, pretty much any point that you see here, you can see that real estate continues to go up in value. And this is one of the biggest ways that people have built wealth in the GTA, is just that, that appreciation that, you're in the world's top, one of the world's top real estate markets. And you're just continuing to get that migration, immigration, people want to continue to buy that. But it's not for many. And like I mentioned in the beginning of this deck, I started to invest in real estate in 2013, and I first only invested in Ontario. But then what happened was that in 2021, I was in a situation where I was looking to buy a property in Milton. It was not in Milton, in Midland, which is about an hour north of Barrie. And it was a detached property. It went into multiple offers. At the end, even we had to improve our offer. The price that we're going to be paying for this property, like, it was just already something that I knew it wasn't going to be cash flow. We're going to be needing to put money out of pocket. And then luckily, the seller didn't accept our offer in time. Our offer expired. He actually came back to us after asking if I still wanted to buy the property, and I refused because at that point, I was already talking to a friend of mine about some opportunities that existed in Alberta. So instead of purchasing that home in Midland, I ended up purchasing a home in Leduc, which is a suburb of Edmonton. It's just about half an hour south of Edmonton. And for, at that time, for about $430,000, I bought a home which was, fully detached home, and it had a second basement unit. So essentially a duplex. And it was in pre-construction. The property got finished. I hired property management out there. Property management started to manage that property for me, and it's been a pretty smooth experience. And I think that a big part of it was the fact that it's kind of at a distance. I can't just get in my car and drive to the home. In fact, having property management there has made it that I'm totally not involved in really anything that happens day to day. The only times when I get involved is to pay the property management company, review a tenant application, sign a lease. These are really the only parts, where I'm coming in. Whereas in properties that I have in Ontario, I'm way more that I'm, collecting rent. Carmelo, go ahead.
Do you have a slide that talks about this?
No.
There we go. Okay.
I do have a slide. Oh, sorry. I just went into my rant. So anyway, that's what happened in 2021. And then in 2022, I had another opportunity to invest in Calgary. I was looking to buy a pre-construction property, and at that time there was this property that you see on the screen right now, which is the Broward in downtown Calgary. This is a property that's going to be completed in 2027, where I purchased a one-bedroom condo for $440,000, includes a parking spot, includes a locker. There was only a 10% deposit that I had to put with this property, and the closing is going to be in 2027. And this is what the rest of this presentation is really going to be about. It's going to be about how I broke down this property purchase in Calgary versus something comparable in the GTA. And when you really do the math, it became a no-brainer. So this is the case study of this presentation, which is basically buying in Toronto versus Calgary. And this is how I made that decision. So this is a property called Queen Church, which is something similar to the Broward by location. This is a condo that's at Queen and Church. It's in pre-construction. It's going to be completed in 2027. Very similar unit sizes. So you can see here that a one-bedroom unit, which is close to the unit that I bought at the Broward, at Queen Church is $775,000. And that for that $775,000, you're paying about $1,600 per square foot, which is basically pretty much where we're at with pre-construction prices in the GTA. This unit you cannot buy a parking spot with. It doesn't qualify for that. Only 3-bedroom units qualified for a parking spot. And even if you had a 3-bedroom unit, you'd be paying $125,000 for that parking spot. And then it also had a deposit structure, which was about 20% over 450 days. So basically it would have been about $150,000 deposit that I would have had to make just to get into this property. And when I look at what I could have rented that property for, here's this, the Q4 stats of average rent in Toronto. I would have gotten about $2,500 for this condo. So, and this is kind of how Calgary's rents compare to that as well. So this is I guess the first thing that I was looking at back then was, how does rent compare? And what I saw is that the rent is not actually that far off. So, currently in Calgary, a one-bedroom condo rents out for about $2,050, which is not a big difference. And this is the product that I bought at the Broward. So you can see that even the floor plan name is the same, A1. This was something. This condo was $440,000. It included a lot of free perks. So first of all, it was only a 10% deposit as opposed to a 20% deposit at Queen Church. Parking was included. A storage locker was included. This unit also came with a 2-year rental guarantee, which is something that's not even done in the GTA. So basically what this rental guarantee meant was that whether I had a tenant in the property or I didn't have a tenant in the property, I'm going to be getting a set amount of rent from them for the first 2 years. And what you find that happens is that when a new condo is built and it goes into interim occupancy and owners need to start occupy their units, a lot of those units hit the market as rentals because most of the buyers in pre-construction are not going to be living there themselves. They're buying in pre-construction as an investment. So what you get is you get a bunch of units that hit the market, and it may take longer to rent certain units out. So one of the things that was really appealing to me about the rental guarantee is that I was going to be getting it right away. And the rental guarantee was also pretty good. So like this is from a purchase agreement. My rental guarantee is actually above what today's market rent is. But the way the rent has gone up, I anticipate that by 2027, a one-bedroom condo in Calgary is going to rent for more than $2,200. But this is guaranteed to me regardless of that. I also got 2 years of free property management with Empire 81, 2 years no condo fees. So I was going to be saving an additional $230 a month for the first 2 years, which is going to be assisting with my cash flow. In Calgary, you're allowed to do assignments. It's the law. Unlike Ontario, where the developer has to allow you to do an assignment, and they don't charge anything. So Truman Home didn't charge anything for assignments. So assignment is the last thing that I would want to do, and I never recommend for anybody to buy a condo with the intention of assigning before closing, because after taxes and even if there was a lot of appreciation that happened, you're not going to come out on top on that. So assigning is really a last resort, but it's nice that option still existed. And they also had a free MLS exit after closing, which was available to me, which basically meant that if I wanted to list this property on MLS through a realtor after the 2-year rental guarantee and sell it, there was going to be a promotion as far as realtor fees to sell that property. So, this is kind of how it all broke down. But, I have a little bit of a side-by-side breakdown here as well, where, this kind of really solidified why this decision made sense for me. So you can see that, as I mentioned, that condo at Queen Church, my deposit or down payment would have been, let's say this is when we're actually buying it. So as much as, in the Broward and Calgary, I had to put a 10% deposit. When I actually go to get my mortgage, I need to put 20% down because it's an investment property. So 20% down on the Broward would have been $88,000. 20% on Queen Church would have been $155,000. So already right there, it's basically going to cost me, double out of pocket just to get the mortgage. My deposit with the Broward was only $44,000. So for basically, I was able to lock in that unit at that price for just that number, where with Queen Church, it would have been $155,000. So basically that full 20% I would have had to come up with in under 2 years, in just about a year and a half. Quite significant. The maintenance fees at Queen Church are more. So, in Toronto, we just have an higher average maintenance fee rate. It's about 80-90 cents per square foot. At Queen Church, if I wanted parking, it would have been $120,000, but this unit was not even eligible for parking. I would have had to pay, realtor fees to find that first tenant if I wasn't a realtor myself. If I needed to assign that property, quite possibly there would have been a fee or restrictions around that. And the builder may also not even permit you outright to rent during interim occupancy, which some builders choose not to do. While in the Broward, I was going to be getting, off the bat, and I wasn't going to be paying $120,000 for parking. I was going to be getting free parking, a free locker. I was going to be getting a 2-year rental guarantee, so I wouldn't have to pay any fees to rent out that property off the bat. 2 years free property management, assignment, and a hassle-free MLS access. So really, the way that Truman has set up this and all their other products is that it's very easy for an investor to get in without having to do much legwork. Like, you don't have to go and worry about finding that first tenant or hiring a property management company or, really any of that. You pay your deposit, you get your mortgage, and for 2 years, you don't really have to worry about it. So, at this price, I was basically able to lock this in. I won't have to get a mortgage on this property until 2027. And then when I do, I really don't have to do anything for the first 2 years. So this would have been like a hands-off investment for about 6-7 years. That's kind of the way I looked at it. So, as we go further down, the rent. So today's rent in Toronto, it's about, let's say, $25.52 for a one-bedroom condo. In 2027, with the way that our rents have been going up, let's say it was going to be $3,200. So that's kind of how I did my cash analysis here. While with the Broward, I just used their 2-year rental guarantee. So I totally just didn't even factor in that Calgary is rapidly growing, and in all likelihood, rent is going to be significantly more than this. I just used the rental guarantee for this calculation. So this is my cash flow calculation. So in Toronto, you get $3,200 minus you're paying right off the bat $3,300 a month for your mortgage, and that's at a 30-year amortization. You're paying $406 for maintenance fees, $406 for property tax, $390 for condo fees. You need to get landlord insurance. So just off the bat, you buy this property, you're closing in 2027. You paid $155,000 down, and your cash flow negative just shy of $1,000 a month. So every month I would have had to put in $912 to float this condo. And a lot of people do this in the GTA because they have the funds to do this and they're investing for appreciation. But I'm not one of them, and I needed to buy a property that was going to be cash flowing. So here's the way that the cash flow analysis at the Broward broke down. So their 2-year rental guarantee, $2,200, minus my mortgage, $1879 minus property tax. And here I used that 2-year no condo fee promo. So I scrapped the maintenance fees. So for the first 2 years, I would be cash flow positive $133. And even if they didn't have that maintenance fee promo, I would be cash flow negative maybe $100 a month, which is quite sustainable when you factor in appreciation and that a good chunk of that rent is also going to pay down your principal. So this is just something that made sense for me. And another thing to understand about Alberta is that, unlike Ontario, Alberta doesn't have land transfer tax. Unlike the GTA, it doesn't have a double land transfer tax. In Alberta, all I really needed to close was $1,200, which is the legal fees. While in Toronto, you would have been paying municipal land transfer tax, provincial land transfer tax, legal costs. I think just the land transfer tax alone, the double land transfers probably would have been about $20,000 to $25,000. Am I kind of right there, Carmelo? What do you think?
You're bang on. It's actually 24,000.
It's 24,000. Yeah. So, this just kind of made sense, right? So that's why I was happy with this purchase and decided to start doing this presentation, and also, help my family, friends, clients invest in Alberta. And, that's, what the rest of this presentation is going to be about. And that is just kind of about what's happening in Alberta, more specifically what's happening in Calgary's market that makes it so appealing and gives me so much confidence that, I'm actually looking at buying another property this year out there. So this is the housing market stat from June 2023. This is from the Calgary Real Estate Board. So in the last year, the average price of a house went up 4.4%, sales went up 10%, new listings were down 3%, inventory dropped significantly, so it dropped by 36%. And there's just about a month of supply left. So this is kind of much different than what we're seeing in the GTA and a lot of other markets that have been hit hard. Keep in mind, the interest rates are the same. The interest rates in Calgary are the same as the interest rates in the GTA. Nothing has really changed. While, in the GTA, we have seen the market come to a bit of a slowdown. I mean, there's, some property types that increase. So like you can see here that, detached homes increased and detached and semis decreased by price in Toronto in the last year, while townhomes and condos decreased in value. But in Calgary, all four product categories went up. And I don't know if you can see this fine print at the bottom, but this is very significant. So like in the last year, the average detached home price in Calgary increased by 13.1%. The average semi, 14.5%. Townhouse increased by 17.8%. And condos are the highest. The average condo price in Calgary increased by 18.7%. This is like a crazy number. But, I think that the condo market, more specifically in Calgary, actually has much more upside to go. There's a lot more potential still there. And the reason why I think that is that currently a condo is about half the price of a detached home. So by far, it's a much more affordable home ownership option, meaning that I think that a good chunk of people that are going to be moving out to Calgary are going to be getting into condos just because right now they're so affordable compared to the other price categories. Sorry, to the other product categories that we see out there. Calgary is experiencing very substantial growth, and a lot of that growth is not just from immigration, but it's also from migration. And you can see where the migration is coming. So this is from the Alberta, population statistics, this graphic here. You can see that most people are moving into Calgary from BC and Ontario. And the reason why they're moving out there is because the wages in Calgary are pretty high. In fact, they have the highest average wage in Canada, while housing compared to the BC and Ontario market remains substantially more affordable. So you can have a home and you can also, have that high quality lifestyle in a market like Calgary, while in Toronto or in Vancouver, it will be quite challenging to do the same. So this is, I think, one of the main things that draws people there. I mean, also, Calgary is the sunniest city in Canada, so they have the most sunshine per year. You can see that Alberta's population is the fastest growing in Canada. And in 2022, it was rated as one of the top cities globally to live in. Top in Canada, but in the top 10 globally, it came in number 3. It's also in very close proximity to the Rocky Mountains and to Banff as well, to Banff National Park. And having that ability to just drive up to Banff for the weekend, especially for anybody who enjoys that outdoor lifestyle, like you're basically living in nature's playground. Like I had an opportunity to visit Calgary in November, and first of all, the city is growing in every single direction, including vertically. Like there's just construction in neighborhoods and things being built everywhere. But at the same time, being able to jump in your car and drive up to the Rockies in just an hour is, unbelievable. And now they're also, going to be having a train connecting Banff to Calgary, so somebody can just get on the train in downtown Calgary with their skis, go to Banff, go skiing for the day, get back on the train, and come back downtown. So, just the opportunities and the growth is going to continue. So this is projected growth from from Statista. So you can see in blue the current growth in 2022, and then you can see in black the projected growth in 2043. So Ontario is expecting to grow up to a population of 19 million, and you can see that Alberta is in fourth place here, but it's going to be catching up to British Columbia in population by 2043. So it's going to be substantial population growth that's going to continue, and for this reason, I basically, when I look at Calgary, I look at investing in Toronto's real estate market in 2004. If I knew back then what I don't now, I would have bought as many condos as I possibly could have. But hindsight's always 2020, and this is the current opportunity that presents itself. So, that low cost of housing, as well as low cost of office space, has also drawn a lot of businesses to Calgary. We have software companies like Technol that has moved their engineering hub to Calgary from California. We have RBC that's bringing tech jobs and an innovation hub. Infosys is going to be already would have hired about 1,000 employees in Calgary. Sorry, I have a bit of a dry throat. We have companies like DH Canada, which is a plane manufacturer, which has recently relocated from the Bombardier Aerospace in Downsview Park to their new headquarters just 30 minutes west of Calgary, and they brought 1,500 personnel with them when they did that. Amazon is building a $4.3 billion cloud computing hub for Amazon Web Services. We have companies like Green Impact Partners, who are bringing construction jobs into Calgary. TELUS is creating 8,500 jobs in Calgary as they unveil their new headquarters. WestJet has also made Calgary their head office, their global headquarters, and also their global connection hub. Just basically the province is growing in every direction. And one of the questions that I get asked a lot about this is, what about the energy sector? And Calgary and Alberta is so dependent on oil, and what happens with oil prices, and what's going to be, how is this going to be impacted by that? But if you look at projects like the oil sands, there haven't been any new oil sands projects unveiled in the last decade, meaning that this is the province has diversified away from that. Like, they're no longer focusing on that, and they've learned their kind of past mistakes of what being dependent on just one sector can do to a city or to a province, and they've diversified away from that. So that's not something that's an issue or on my radar anymore. Another benefit of investing in Calgary, which was really appealing to me, was the leniency of the Residential Tenancies Act out there. So, a lot of Ontario investors, you see the headlines, you hear the news, people living in their car while their house is being rented out to a tenant that's not paying rent and refusing to move out. And, they're waiting for 8, 10, 12 months to get a hearing with the landlord tenant board and to get this tenant out. Well, here's some of the ways how Alberta's Residential Tenancies Act differs from Ontario. So in Ontario, we have what's called rent control. So rent control basically applies to any unit that was constructed prior to October 2018, meaning the government sets out the minimum rate that you can increase the rent. It's usually the rate of inflation. This year was 2.5%, and last year was 2.5% as well. In Alberta, there is no rent control, so you can basically increase the rent to whatever you want, which is good because you can increase it to market rent as market rent continues to go up. So, in Toronto, if you have somebody living there and rents have gone up 10 or 15%, you can only increase 2.5. Well, in Alberta, you don't have that constraint. In Ontario, after 1 year, the tenancy goes to month, while in Alberta, a fixed year tenancy ends at the end of the year, meaning that you need to sign a new lease. In Ontario, you're not permitted to take deposits for things like damage deposits or security deposits, except for last month's rent. In Alberta, damage deposits, security deposits, pet deposits are permitted. In Ontario, pet provisions in the lease are not enforceable. So if you tell somebody that they can't have a dog, that's not enforceable unless you're renting out a condo to them and that building prohibits that type of pet. In Alberta, pet provisions in the lease are fully enforceable. And in Ontario, the average wait times for a landlord-tenant board hearing are about 8 to 10 months, while in Calgary, they're about 14 to 28 days, meaning just under a month. So, this just overall creates an environment that's very favorable for landlords. It really minimizes that risk of, having a tenant that, is difficult to deal with. It gives you a lot more power as well. So, I understand that we have these provisions in our Residential Tenancies Act for a reason, to protect tenants from bad landlords. So I'm not saying that it's, great to not have rent control, but, what I'm saying is this just gives you more tools to run your investment property the way that you want to run your investment property. So a little bit about the current opportunities that exist in Calgary. So the Broward has sold out. But there's been 3 new condo projects that have launched. The one that's in downtown Calgary is Imperia Condos. It's actually the sister building of the Broward. So at Imperia, the price point for 1-bedroom condos starts at about $450,000, while at Orson and Mine Condos, which are condo projects which are outside of downtown Calgary, units start in the low 300s. And very similar to the types of benefits that I got at the Broward, the condo projects that Truman Home sells, they come with a 2-year rental guarantee, 2 years free property management, 2 years no condo fees, and then there may also be specific kind of promotions that happen with each project. Like, for example, Imperia at one point was offering a free locker with that project. So so just a bit about what Orson offers. So again, 2-year rental guarantee, 2 years free property management, and it's basically just a 10% deposit. So they have 2-bed and 2 baths that are starting under $400,000. I think at Orson they start about $389,000 for a 2-bedroom, 2-bath. So the deposit that will be required for that is basically a 10% deposit over 1 year. So it's $38,000 with secure a unit closing in 2028. Now keep in mind, when you go to get your mortgage, you would need to do 20% down. So you'd need to come up with the rest at that point. This is Lincoln Condos. So Lincoln is another project that's launching in downtown Calgary. As you can see, the prices, they go up as new projects are released. So whereas I got my condo at the Broward for $439, it included free parking and free locker. Here at Lincoln, a 1-bedroom condo is already at $491. So it's increased by about $50,000. It includes a free parking and free locker. So, the prices continue to go up and reflect that. And, we can also see that kind of in some of these in some of the slides where I talked about what the average prices are. There's also freehold options as well for those who are not looking at condos. So there's Rangeview, where you can get a fully detached home starting at $670,000, and then there's also Chelsea duplexes. Now, a duplex in Alberta is not the same as a duplex in Toronto. So in Alberta, a duplex is basically a semi. So they start at $571,000, but they do have an option if you want to put the basement has a separate entrance. So if you want to finish the basement and put a second apartment in there, you can do that as well. So, unlike many of the other presentations that we've done, it's just basically been me talking for the last 20 minutes. So I'm going to open up the floor to anybody that may have any questions.